So we have a small group. I do have some thoughts to share, slides, etc. But this is very fluid, so feel free to chime in. I'm not sure that you'll learn a whole bunch about crime and tax or tax crimes or how to get out of one or commit one. But I do kind of the message here is I hope I can give you a sense of why I love what I do so much and why I think tax is the most fascinating thing ever. Somebody not a long time ago asked me to explain what an accountant does. And I put it as in an accountant is like a librarian of numbers in the sense that accounting is not a whole lot about math, but it's like you are archiving numbers. And the person's answer was that I basically combined the two most boring things together, accounting, numbers, and being a librarian. And that, made it really bad. But in reality, it is really exciting, and particularly tax. It's the one thing that you really cannot escape. I mean, I don't know what you could do in your life to escape paying a tax in the course of your life. Maybe, you might be able to get away with it, for one day if you stay home and don't do anything, but it's really something that will accompany you for the rest of your life. And so whatever things you do, there are embedded decisions there that somebody has made for you or that you are kind of impliedly going along with. Not long ago, I was at Fred Meyer with my son, and we bought that time we bought only ice cream. I think I had apple pie, and we were buying vanilla ice cream. And of course, my 11-year-old boy, considering that he has the dad that he has, we checked out, and there was no sales tax on ice cream. And he said, it didn't charge us sales tax on ice cream. Why is that? I was really proud, right? That's kind of like a proud moment for a tax dad. But so in something like that, there is a decision embedded in there, because that means that somebody considered ice cream to be an essential good, because essential goods in Washington don't have sales tax, like bread and water and ice cream. So ice cream is essential. There are many other things. For example, there are certain benefits for tax benefits in the form of credits or deductions that a taxpayer receives for children or for the care of the children. For example, there is a tax credit for those who need childcare to go to work. But the tax credit stops when the child reaches the age of 13. And so implied in that is this policy decision that a 13-year-old should be able to stay home alone. So there are these kinds of implications everywhere in everything that we do. So I'm going to show you a little bit tonight a connection that I made between crime and sales tax in Washington. But before we go there, I'm just going to change topic altogether, and I'm going to show you a really neat cartoon from 1942 that Disney aired. So maybe a couple of you that may have taken a class with me could recall this. So I'm going to share my screen and share audio. I've never done it before, so hopefully it works. And we'll just watch about half of this cartoon. So bear with me as we do that. It's called The New Spirit, 1942. So I said, so obviously context here is everything, right? We have a 1942 video, Pearl Harbor attack, middle of the war. The video goes on to explain what taxes pay for. It goes into details about guns and planes and all this kind of stuff. And what's really interesting is that from this point forward, it repeats it all the time: taxes for freedom, taxes for democracy. And at some point in history, somehow that kind of changed, right? Where like taxes and freedom, taxes and democracy, that seems kind of like an oxymoron. So context is everything. And I think it was really interesting for Disney to air this cartoon, because if you think about what was at stake during World War II, Disney itself had a lot at stake, because Disney really thrives on being free to do what it does. So there was this joint partnership. There was a special, I forgot what it was called, like Media War Office and Disney partnership on airing this kind of propaganda type cartoons. So I had prepared a presentation, but I'm feeling kind of what's the right word, spontaneous tonight. So I'm going to show you something else. I'm going to take this to more of a history twist. So what I'm about to show you now is a 1918 paper cutout, newspaper cutout. And this says, someone, hang on, my screen doesn't, okay, someone will tell. Somebody's going to tell on you if you don't pay your income tax. Congress has fixed it so that somebody must tell whether he wants to or not. One section of the war income tax law, exhaustively comprehensive in scope, requires every person without exception and every corporation, partnership, association, and insurance company in whatever capacity acting who paid $800 or more to another person, corporation, partnership, association, or insurance company as interest, rent, salary, wages, premiums, annuities, compensation, remuneration, emoluments, or other fixed determinable gains, profits, and income. In other words, everything, to report the name and address of the person to whom the payment was made, together with the amount of the payment, to the Commissioner of the Internal Revenue, using a form prescribed for the purpose, Form 1099. So there is the history of the Form 1099. In 1918, it was required for payments above 800. And in 2023, it is required for payments above 600. So wait a second. So we have an $800 threshold in 1918 and a $600 threshold in 2023. So $600 in 2023, I haven't worked out the math, but it's probably a lot less. It could be like $20 in 1918 figure, or, something to that effect. And so you couple that, in other words, now we require a 1099 much faster. You couple it with, well, the population has grown a lot. You couple it with, there's a lot more oversight. And suddenly, I mean, as you can imagine, the amount of 1099s over history, we don't have data from 1918. I think the earliest year I was able to find was 1925 to 1925, but it basically grew out something like 5,000 times. And so this goes a lot into the information hunger, right? This kind of general collection of information that the government collects, and so it trickles into every aspect of life. Now suddenly we have this enormous collection of information, as well as an enormous compliance burden. Because if you were a corporation in 1918, you're looking at having one accountant who files 10 of these things. If you're a business today, you might have to file thousands and thousands and thousands of these things. So there's a lot more in terms of compliance costs, as well as in terms of the manpower that it actually takes to make it happen. So with that said, the message here is that a lot happens kind of away from our eyes, right? It's easy to see like, well, your tax rates are going from 25 to 30 and everybody kind of gets behind it. But a lot of the tax policy stuff happens without us even realizing. So I'm just going to show you an example of something that has piqued my interest lately. And it has to do with a tiny portion of the sales tax in Washington, very tiny portion, about 0.1 to 0.2% of the sales tax, that is meant to finance criminal justice programs. So we'll leave it at that for now, criminal justice programs. So let me show you kind of how this happened a bit. All right, so now the reason why sales taxes are so popular is because they have what's called market salience. And market salience essentially means that people don't respond. They don't make consumer decisions based on the sales tax. So when you're at the grocery store, you're not really thinking about the sales tax here is 6% versus there it's 7%. It doesn't really impact, unless we're talking about a big difference. You're buying a big item and you go from 0 to 10. It doesn't really factor into your decision to buy or not buy. So it makes it really popular. And then there is fiscal illusion, which is more or less the same thing, that you don't see it. So if I was a politician and I was running on a platform of, I'm going to raise your income taxes or I'm going to raise your property taxes, I wouldn't be extremely popular. But raising sales taxes is somehow more acceptable. And there has been research that shows that you're more likely to get elected if your platform is to raise sales taxes than if your platform is to raise any other type of tax. Then the thing about the sales tax that is really, I'm going to use the word cool. I mean, that's kind of a relative term, but unique, I should say, that's the right word, is that it allows for the shifting of tax incidence. So tax incidence means that those who consume a service are those who pay for the service. That would be the ideal, right? Ideally, if my son is attending public school, I'm the one that pays for that public school. So if my son is attending a public school in our neighborhood school district, then everybody in the school district should pay for that school. Now, if I can get you to pay for my son's school, that I am shifting the tax incidence of that cost. And sales tax allows for that because of the income tax is income tax to me, and here I am. A property tax is tax based on where I live and the home that I own. But the sales tax allows me to sell you something. You come to my place, my neighborhood, my county. I sell you something. You leave your tax dollars here and then you go home. So if I am, say, for example, King County could have Kittitas County shoppers come to King County, shop, leave money there, and that money goes to pay for King County schools, not Kittitas County schools. And so you have the shifting of the tax incidence whenever you have a service that can be paid with sales tax rather than any other kind of tax. And so over the course of the years, this kind of idea has caught on as gained a lot of traction. So what you have here is how much local governments, we're talking about cities and counties, relied on the property tax in 1970 versus how much they relied in 2015. So the program, the cost, the financing of local governments in 1970 was mostly property taxes, taxes on homes and other assets. And the financing of local governments now is only a quarter. So what made up the difference? Obviously, something else made up the difference. And the difference was made up, I think I took that off. Obviously, the difference is made up by other things. Those other things could be not just taxes, but it could also be licensing fees, government services. Now you have to pay, for example, for certain services or certain expedited services, things like passes to access certain parks or certain recreational facilities. And of course, an agenda of taxes. You know, you have sales taxes, but you also have excise taxes, taxes on cigarettes and taxes on fuel and taxes on all sorts of other things, business licensing fees and all that kind of stuff. So the reason why this is interesting, here, I'm just going to show you an example of what just happened. I'm going to show you an example of Kansas. Okay. So here we have Kansas. This is a 1996 study, so kind of before e-commerce. So we have Kansas that has a state sales tax rate of 4.2 and is surrounded by 3 states on 3 sides that have a lower sales tax rate. And what the study has found that essentially closer to the border with the other 3 states, there was an erosion of sales tax revenue. So that means that we're going to have less retail space in Kansas across the close to the border. We're going to have less people that work there in retail. We're going to have less sales and, of course, less sales tax for the simple reason that people are going to go across the border to shop because it's cheaper. And so there is a loss of revenue. So this to show that there is competition. So governments do compete. Tax competition is a thing. And this is called a horizontal tax competition. When a state competes with another state or a county competes with another county, we have horizontal tax competition. So let's go kind of straight to the thing. All right, so let's go to here. Kind of want to go to this part right here, this table that I have on the right side of the slide. In each state, we have a state sales tax. And well, in most states, we also have a local sales tax that is a county, sometimes even a city sales tax. For example, if you look at New York, we have about half of the New York sales tax made up of what the state charges, and the other half is made up of what the counties or the city charges. So if you shop in Buffalo, New York, and you buy something for $100 and you pay a $10 sales tax, about half of that goes to the state of New York. The other half of it goes to the county and maybe the city. So the green portion is also known as a local option sales tax. Local option sales tax. The reason it's a local option sales tax is because local government can choose to charge it. And of course, they always do. So in Washington, the sales tax rate is 6.5%. A county in Washington could choose to not charge anything more than that. So they could just say, we have a 0 sales tax rate in this county. But then, of course, how is the county going to make money? Because in Washington, we have no income tax. So that means that the county would have to basically pay for everything it does through the property tax. So in Washington, because we have no income tax, then the sales tax is always the go-to. Because remember, we have a dramatic decline from property taxes. We don't have an income tax, so everything is going to hit on the sales tax. And the reason we have a dramatic decline in property taxes is because we like this shifting of the tax incidence. We like this idea that if I can get you to pay for the fire service that I get where I live, why wouldn't I do that? If I can get you to pay for my schools, then you don't benefit from them. Why would I not do that? So it's this exporting of the costs. All right, so now this local option sales tax has morphed into something that is now called a special purpose local option sales tax, as PLOST. And here you have some of these, what are called, picket signs that say vote yes or vote no to these PLOST. So PLOST is just like a local option sales tax, but it has a twist. In a local option sales tax, what we are saying is Thurston County wants 2% of everything you buy, and that's it. When you pay that 2%, we, the county, can use that to pay for whatever we need. So it goes into a general fund, a general revenue. But PLOST is more specific. PLOST is, I'm going to charge you an extra 0.2% to pay for schools. I'm going to charge you an extra 0.1% to pay for ferry renovation. I'm going to charge you 0.3% to pay for road improvements. So that is a special purpose. So those funds are earmarked for that intended purpose. And they have become extremely popular. In fact, it's starting with the southeastern states. The two main reasons why these special purpose local option sales taxes became popular was to finance education or transportation, but mostly education. So I'm going to show you what a Tennessee study showed. This is not really a surprise. But what we have here in the first figure on the left is the local sales tax revenue per $1,000 of personal income. And what you have from left to right is a sense for how urban the area is. So not surprising, the most rural area gets the least amount of sales tax for obvious reasons, because people don't shop there. The people there don't typically have the highest income. And even if they need to shop, they go somewhere else. So there is little sales tax revenue that stays there. Okay, now the result is, if you're telling me that this is how you're going to pay for schools, which schools are going to get the most money? Obviously, the ones that are in the city, not the ones that are in rural areas. And so in the figure in the middle, what you have is the per pupil sales tax revenue compared to the state average. In other words, if the state average is 1, is this school getting more than 1 or getting less than 1? Because every school that is getting more than 1 is taking revenue from those that are getting less than 1. And so again, you have from left to right a measure of rurality, of how rural the area is. And so a pupil, a student in a rural area, is essentially getting 50 cents on the dollar of what they should be getting. And a student in an urban or metro area is essentially getting $1.50. So when you compare that, that means that a school in the city, a public school in the city, has 3 times the money available to provide the exact same service to the exact same number of students, because we're scaling this to the equal amount of students than students that are attending a public school in a non-urban area. So what you take away from this is that it seems like if you are going to pay for a critical government service like education, probably the sales tax is not the best way to do it, because it's going to cause inequality between some who get a service with top dollars and some who get a service with not enough funds. So what's really interesting about Washington is that in Washington we have this problem, but even bigger. Because if we're like playing Uno and you're a local government and your options are, I'm going to use the income tax, the property tax, the sales tax, and the excise taxes. Well, first of all, income tax is not an option. We don't have income tax in Washington, and they are unconstitutional. So we cannot have income tax in Washington. 2, we don't want to use the property tax because everybody's against it. And so where does that leave us? The sales tax is where we go. And in fact, sales tax reliance on the sales tax in Washington over the last 100 years. So this is 1921 to 2020. In 1921, Washington did not even have a sales tax. A sales tax was first passed, I think, around 1923. So from 1921 to 2020, we went from 0 reliance on the sales tax to roughly, what is that, 70% reliance on the sales tax. And so in Washington, just to give you an idea of how, I'm just going to show you here how the breakdown of the city of Seattle sales tax rate is broken down. We have a 10.1% sales tax rate in the city of Seattle. So this 10.1% is made up of the 6.5% for the state, that's the blue part, the 3.5% for the county, and the 0.1% that the city of Seattle itself imposes. And on the right side, you have the breakdown of the 3.5% that the county, the county gets the charge. So of this 3.5%, 1% is lost, local option sales tax. This is the 1% that goes into the general fund that I can use to pay for whatever I want. The remaining 2.5% is a mixture of SPLOSTs, special purpose local option sales taxes. We have a 1.4% that is meant to pay for high capacity transportation services, 0.9% operation, maintenance, or capital needs of public transportation systems, 0.1% chemical dependency or mental health treatment programs, and 0.1% activities that substantially assist the criminal justice system. So this is just an example. So when we look at Washington as a whole, in terms of the menu, if you are a county whatever, and you're looking at the menu of special purpose local option sales taxes that you could potentially charge, as you can see, we have a very substantial list. We have operation of public transportation system, high capacity transportation, passenger only ferries, financing, design, remodeling, blah, 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 improvement of zoo, aquarium. So you could charge an additional sales tax for the financing, design, acquisition, construction, equipment, operating, maintaining of zoos and aquariums in Washington. So financing, refinancing, construction of public facilities. Anyway, you see where this is going. So very, very comprehensive agenda. And the last 2, which is kind of where, for me, caught my interest, was activities that substantially assist the criminal justice system, and a special sales tax that is meant to cover the cost of financing, designing, acquisition, construction, blah, 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 of juvenile detention facilities and jails. So now we have 2 special purpose local option sales taxes, one that is meant to finance criminal justice system and the other one juvenile detention facilities. And the way that I approached this was always from the premise that, what we learned from Tennessee is that if you are trying to finance a critical service like education, I would think that criminal justice is a critical service just like education. It would seem like more money is going to go in one place and less money is going to go in another. So how you take from that we're not going to have an equal packet of services. Is that because the rich counties needed more, or is it because the rich counties are going to be able to offer great service at the expense of the non-market dominant counties? Anyway, I'm going to show you what that means. All right, so the other thing I found interesting is that the legislature in Washington passed these two splosts in 1990. And the legislative premise is the beginning statement that explains why we're doing this. The legislative premise reads, the legislature finds and declares that local governments' criminal justice systems are in need of assistance. Okay, so we need this new sales tax because we're in need of assistance. Many counties and cities are unable to provide sufficient funding for additional police protection, mitigation of congested court systems, and relief of overcrowded jails. So I found this really interesting because on the one hand, it tells us that the tax is for criminal justice, the criminal justice system. On the other hand, the way that the legislature is understanding this is that we need more police, bigger jails, and a bigger court system or a faster court system. And it obviously kind of leaves you the kind of takeaway that is that really what criminal justice is about? Is criminal justice really about more police and bigger jails and faster courts, or is there more to it? So that's kind of where I was perplexed. So I'm going to skip some stuff here. In terms of where in Washington you will find these two sales taxes, remember, one of them is for criminal justice. The other one is specifically for juvenile detention facilities. The dark green means that they have both. And the light green means that we only have the criminal justice one. And this one means that we have neither. So Aston, Garfield, Clickitat don't have either one of them. Chelan, Snohomish will only have the criminal justice one. Lewis has both, Pierce has both, and so on. I'm a tax person, so I don't really have, a criminology background. So I kind of went back to the drawing board and educated myself on what does criminal justice mean. And I read essentially where the first criminology studies started. So at what point did we as a society started to concern ourselves with what makes people commit crime? In the very beginning, the study of crime was rather, I'd say, sad, in the sense that it was believed that people committed crime just because there is something wrong with them. And when I say something wrong with them, for example, we thought that they commit crime because they have imperfections in their skull. So they have bumps in their head, and that's why they commit crime. Or we thought that biologically, their genes, they just have criminal genes. So it's just in their genes. And in fact, some of the criminology, the early criminological studies said, well, let's just basically get rid of these genes and we'll solve the crime problem. And oftentimes when you had criminological research, the research was about a specific family, the Kallikak family. So a family of criminals. Let's research a family and see what causes this family to commit crime. So the research, the unit of research was the family, intended as in, this is a family of born criminals. Let's see what makes them commit crime. Obviously, we came a long way in terms of realizing that's not the case. But Goddard, this was interesting to me, was the one that minted the terms moron, imbecile, and idiot based on the different level of IQ. So I never knew that moron means a different level of IQ than an idiot or an imbecile. I've always thought of them as synonyms, but apparently they started with a different level of IQ. So it was about early after the Great Depression that this Merton kind of changed everything in the sense that it gave us a modern understanding of what crime is and what causes crime. And so Merton essentially said, I'm going to actually, I thought I had that. So Merton essentially said we have an institutional means, and you can think of institutional means like what society offers. So let's think of this as what society offers. And the cultural goals in terms of what I want from life. So if what I want from life is the same as what society offers, then I conform. If what I want from life is not the same than what society offers, I just innovate. I want something that flies and society doesn't offer that, I innovate. if what I want in life is not offered to me by society, let's say that I want to become the president of X country, but in my country, there's such a level of corruption, I'm never going to get there. Then I become ritualistic. In other words, I just kind of go through my life without really having a purpose. I just kind of wake up in the morning, go to work, and I just go through the motion and live like that without a sense of purpose. The other option is, what if what I want from life is not offered by society? I just kind of go on my own. I just buy myself a house, go into the woods and just live and hunt by myself. And I do not want to interact with anybody else because, I just reject what society has to give to me, and I want to retreat. The other option is, instead of retreating, I could rebel. So if what I want is not achievable and offered, one way is I could retreat. The other way is I could rebel. And that's where crime starts. So crime is a form of rebellion because what you want is not offered you don't have an opportunity to get what you want. In other words, you don't have the ability to achieve your goals based on what society offers you. So Merton, strangely, did not get a whole lot of traction because a lot of his research kind of was booming after World War II. And that was an economic boom, the push of the American dream. And the whole message of the American dream is like, yes, everybody can. And Merton was saying, well, kind of not, because this idea that everybody can, what if somebody can't? And that was not really a good message to sell, because we wanted everybody to believe that, yes, everybody can. The means are there for everybody. Everybody can get rich. Everybody can achieve this and that. So his studies really became popular after the boom, the American dream. But what we have learned from Merton is that when it comes to crime is a combination of space, opportunity, and a bunch of other things that are connected to it. So there are several dimensions. For example, we have family disruption, like children that grow up in foster homes, divorce rate, abuse in the home. We have social disorganization. Social disorganization could be like long commute time, so people don't really get to spend a whole lot of quality. People that don't have social networks, they don't have friends, or they don't have churches or youth organization. And then we have deprivation. And by deprivation, we mean people just don't have the means. So that means they're unemployed, or they don't have health insurance, or their income is too low. And then demographics, in terms of there are differences between how the population is distributed, the unevenness of the distribution of income and male versus female population, and so on. So the combination of all of this is connected to crime. And so, kind of taking this into account, I thought to myself, it doesn't seem, from what I see, that crime is a result of police, courts, and jails. It seems to be more complicated than that. It involves home ownership, unemployment, drug use, foster care, abuse in the home, friendship networks, and a lot of these things. So this is the part that kind of puzzled me, is that to have, when we have sales tax thrives on competition and inequality. Because the whole premise of the sales tax is that as a government, is that I'm going to take it from you, my competition. And so I'm going to compete with you. And then the more I get, the less you get. Because if I'm going to spend $100, I'm only going to spend it once. I'm not going to go to Pierce County, spend 100, and King spend 100. I'm only going to spend it once. I'm not thinking about, let me split it evenly so each county gets half. And we don't think that way. So sales tax is premised on this competition and inequality. And this same competition and inequality drives, in part, crime. So how can crime go down by using something that actually seems to make it go up? That's where I had a circular reference that didn't really make sense to me. So I basically looked at, what was it, like 46 variables that the literature showed were connected to crime, organized in the 4 domains. And so you can see yourself here. I looked at total births to single teenage mothers, divorces, binge drinking, population density, percentage of population with college education, population in poverty, home ownership, homelessness, income levels, percentage of minors, female, percentage of people who live in rural areas, unemployed, people without health insurance, and all of these things. And so those, are connected to crime, or I guess should give me some predictive value about crime. And then I'm trying to see, is there any connection between these things and actual sales tax? How much sales tax is collected, how much tax total is collected, and how many sales are made, how many taxable sales we have. And so I did this for every county for a 30-year period from 1990 to 2018. So quite a bit of stuff. So to kind of bring you to, the findings, the obvious ones. Obvious ones is that over the course of 30 years, counties are using the sales tax more. Pretty obvious that they are using it more because they want to use property tax less. The other reflection is that when you look at, this mark right here, the 1, essentially indicates that a county is collecting the sales tax that is the product of the income of the people that live there times the sales tax rate. In other words, if everybody in Pierce County shops only in Pierce County, then we would have 1. If Pierce County has more than that, then we have above 1. If Pierce County has less than that, we have below 1. So every county above 1 is essentially winning at competition, and every county below 1 is losing at competition. And so only 8% of the observations were above 1, which means that for every 100 instances, only 8 are winning and 92 are losing. And so in terms of identifying which counties are winning at this game, the blue ones are essentially the ones that are winning, and the red ones are the ones that are losing. And the deeper red means you're losing more. Not surprisingly, the more rural you are, the more you lose at the sales tax competition game. So the blue counties are also known as market dominant. They're market dominant counties because, people shop there. I haven't in this research looked at how online sales change things. They probably did to some extent, but this is mostly based on data as in like physical retail sales. Okay, so one thing that I tried to look into was, we have these 2 sales taxes. Whenever you have a SPLOST, a special purpose local option sales tax, let's say that I decide I'm going to charge now a sales tax to grow new trees. Well, I suppose that is because maybe we don't have enough. We need more. So I would imagine that there is a statistical association between the number of trees or the need for trees and my decision to impose the sales tax. And so when we are charging these crime-related sales tax, is it because we have more crime? And the negative here basically says, no, that's not the case. In fact, it's quite the opposite. It seems like the less crime we have, the more likely it is that we actually want the sales tax. So there is no logic of, we have a lot of crime, let's charge the sales tax so that we have more money to fight crime. It actually goes the other way around. It seems like the less crime you have, the more likely it is you have the tax. Although when you have a number here that is really below 4, it doesn't really have much value. In other words, the takeaway here is that there doesn't really seem to be a connection. There is no connection between the crime level and whether we have this tax. So then why would a county choose to have this tax? If it's not because of crime, then because of what? So I looked at, okay, maybe it has to do with politics. Maybe it's whether it's a Democrat or a Republican county, more or less sales tax. And there was no association there either. It doesn't have anything to do with politics either. So then I kind of went into other things and I looked at, okay, what else? When I look at all of the numbers that I have collected, what is statistically connected with the county deciding yes or no? I'm going to have this tax, yes or no. And what is predictive of that is the things that you see: the degree of reliance on the sales tax, the income levels, taxable retail sales, percentage of population with college degree. So what this tells us is that a county decides to impose a tax on crime, not because of crime, not because of politics, but because it can, because it has the people, it has the money. So why not? In fact, what you have here is, remember that one, anybody above one is winning. So what you have here is essentially the above one. So here are the ones that are winning at the competition. And this means that what is the likelihood that they will have the tax? And as you can see, once it reaches one, in other words, once they know that they're going to win at this game, then why would we not have the tax? Once it reaches one, once we know that we're going to win at this game, why would we not have the tax? So we basically have it because we can. That's kind of the takeaway from it for me. So what was interesting for me is that by just looking at these 5 things that I showed you, the how much we rely on sales tax, the income levels, the percentage of population with college degrees, and then I also added how much of the population is unemployed, how many minors we have, how many children are in basic food programs, how many people do not speak English. This turns out to be important because not being proficient in English limits you from having certain opportunities, as well as mental health problems or substance abuse disorders. So by using these things alone, we can predict about 93% of sales tax revenue. So sales tax revenue is driven by income, not surprising, college education, not surprising, ability to get the best jobs in terms of being proficient in English, whether you grew up in poverty or not, whether you're unemployed or not surprising either, whether you have problems with alcoholism or, mental health in general. So just these things alone will allow us to predict 93% of sales tax revenue. So the blue are the actual values, and the orange is what we would have predicted based on what we learned. So okay, so at this point, I'm like, okay, I learned a little bit about what makes sales tax go up. Let's see what makes crime go up, and then let's see if we can make sense of all this. So when we switch to crime, and with crime, this is kind of complicated, but crime is really interesting because you have things that impact crime. Like, let's say, for example, I'm unemployed. Just make it very simple. I'm unemployed and I have a critical need. So it might be one of the things that makes me more likely to commit theft, just as a very simplistic example. So we have that element of the explanatory variable. But the other part of it is that if I have stolen before, I'm also more likely to steal again. So the crime is also predictive of itself. And the other part of it is that if I committed other crimes, I'm also more likely to commit this one. So if I have committed a robbery in the past, I'm also more likely to commit theft now. And so crime is not only associated with itself, it's associated with other variables, and it's also associated with other crime. So I try to capture all of this over, again, the course of 30 years, 46 variables. So there's a lot of information in the model. And I try to create a pattern of imagining that for the next 30 years, let's imagine that for the next 30 years, we have the same levels of unemployment, the same levels of chemical dependency, the same level of homelessness, the same level of home ownership that we had the last 30 years. Would we have been able to predict crime? And here I'm showing you just some counties. For example, in Benton County, let me actually go to something more common like assault. Okay, let's say go to assault in Benton County. So what you have here is the blue. These are the actual values, the actual count. And what you have here is what our prediction would have been. And so the bigger the width essentially gives you a sense for within what degree of margin would have been able to guess, right? So the width would tell you if the same values that we had the last 30 years we're going to have the next 30 years, we would have been able to predict within this margin of confidence. And of course, the more a crime happens, the better we're able to predict it because we have more data. And as I did this, I learned, didn't know it at the time, that actually is exactly what's behind CrimeStat, which is a software used by, I think, that was a slide, yeah, but the National Institute of Justice. CrimeStat is essentially based on this kind of idea. So in other words, what I learned from this exercise is that crime is predictable, not based on the number of police officers, how fast the court system works, and how large the jails are. That's not what allows us to predict crime. What allows us to predict crime is crime itself, other crimes, and all of these social variables. So if the purpose of the sales tax is to make crime decrease, then it probably would be more efficient to put that money behind those things than make crime go up, like poverty, for example, being one of them, poverty among children being another one. So it would seem to be more effective to put money there, because that is one of the more predictive explanatory variables of crime. So essentially, I was able to identify the most common things that would be able to generate, yes, more sales tax, but also less crime. And so when you boil it down, there were essentially these few things that were the main drivers of both sales tax and crime. And that is, of course, whether people are unemployed, whether children grow up in poverty, whether children grow up on basic food programs, again, a measure of poverty, how much of the population has a college degree, how much the population speaks or does not speak English, and how much of the population has mental health problems. So when you break this down, essentially, if you focus on how a child grows up, if money is spent to make sure that a child, the conditions basically that are the most predictive of both sales tax revenue and crime are whether the child lives in poverty, attends college, learns English, because those will then lead to also poverty as an adult, unemployment as an adult, sales tax, and are also, as we've seen, statistically associated with crime. So it would seem, from the research basically, that all this money that was put into criminal justice, the way the legislature understood it, would have been more efficient, basically investing in youth programs in terms of preventing crimes in the long run. So that's kind of how I got into, I was going to say that's how I got into crime, but that probably wouldn't kind of go well. All right, probably bored all of you immensely. I know my son's in the other room and he's bored for sure, unless he has his phone and is on YouTube. But if any of you is paying attention, I'll take questions. See how much stuff you learned today, from war, taxes, to 1099s being in 1918, crime, and that was a lot.
I have a question.
Yes.
Have you presented this information, what you've learned, to any of the governments?
Well, it's interesting that you say that. No, but what's really interesting, and I'm not saying that this happened as a result of, because this has actually been published in 2 different papers. What's really interesting is that I was actually, I gave a version of this presentation at the Provost Lecture Series. And as I was preparing, because these are slides that I kind of used over the months, so I update them every time I present. And one of the last part of the presentation is what we could do better. And one of the recommendation was, data transparency. We need to start collecting this data on a certain basis. Juvenile data is not being consistent. So I have all these. And so as I'm updating these slides, I see like, well, they're doing it now. And then I go to the next one. They started doing this, and I go to the next one. They started doing this. So I'm not saying that it had anything to do with me, but they just in the last 2 years, they started doing a few of the things that I came down to as recommendations. So I don't know.
Well, I love the Disney commercial cartoon. That was really cool. Right. And I love learning about the history of the 1099. So anybody that's done accounting for businesses would find that very interesting.
Yeah, I wanted to, one of the things I like to do is I like to get a sense of how much of the information, what's the word, hoarding, this has caused. And so I did actually make a FOIA request to the IRS to disclose how many 1099s they received during the years. But, this is back when the actual reports were done on paper. And so they wanted some like $15,000 to collect the data. I was like, okay, well, maybe another time. We'll work with what we got for now.
So they couldn't give you those numbers because it was paper-based. Do they have digital information?
We do have numbers. The numbers that I want, we have them starting, I don't know, 1995, the way I want them. Now, going all the way back to 1960, we can work with them. There are some Excel sheets that you can kind of make it up. And then going back to 1925, they have some old versions of reports. So here, I mean, I know you're probably bored out of your mind, but I do want to show you this. So here are the statistics, tax archives from 1863. So for example, if you open the 1866, this is basically the IRS report. It used to be called, I don't know, the Bureau or the Commission of Internal Revenue. And this has statistics from 1866 tax. All sorts of statistics like returns filed and audits, number of audits, and all sorts of stats. They're pretty much what we have now, but of course in ancient form. So if you wanted to know how many people filed from Rhode Island and what the average income was in Rhode Island, you will find it here.
Wow.
So I think I'm done.
I think that was great. Thank you so much, Dr. Ambrosio, for coming and teaching us about that.